Hey guys, Frank Curzio here with another live video, and the title of this is COVID-19 could cause another market crash. Sounds pretty crazy that the same risk will cause another market crash, but you have to realize we are priced for perfection. If you're looking at some of the best analysts in the world, the greatest investors are saying it's the most dangerous market ever because it's extremely expensive, which means expectations are built in that everything's going to be fine. There's COVID-19 we're going to be fine with, problems with Russia, trade going forward we're going to be fine with. Everything's going to open up. The economy is going to be great in about 12 months from now. That's what we're pricing in, perfection. It's interesting to see the COVID-19 story come back up because obviously we're going to see cases rise, but it's getting to the point where it's a little scary. And I want to share a personal story with you because when all this took place, again, we were engulfed in this, and we're really early party saying that market, stocks would come down in early February. Uh, when that happened, I didn't know too many people who had coronavirus. In the past couple of days, there's three people that contacted me that said that they had exposure or were in contact with, and just said, "Hey, I want to do the right thing and let everybody know." That never happened before. So you're seeing a spike in cases in places like Florida, South Carolina, Arizona, and Texas. Now, what does this mean in relationship with stocks? Because we are pricing in perfection. But Evercore came out with a great study. I'm going to share my screen here. This is about 400 plus, companies, corporate, and it says, will there be a second wave of COVID-19 as the U.S. economy restarts? Look at this. Yes, right? This is like absolutely. So it's this line right here is the June 19th date. Have you seen that? So it's a June 19th date over there, but we're looking at this dark green line. I mean, yes, that is going to be a significant pullback. Look how many people, less than 5%. So now you're looking over here, modest pullback maybe. Over here, it's over 35%. Pretty much, yeah, it was slow, but no change in the trend. Yes, minimal impact, no. So what does this mean right here? It means that expectations are for COVID-19 to go away, and it's not going away. And if we see another shutdown, guys, you look at the airlines that came back. Yes, they pulled back a little bit from their highs. You're looking at casinos that just opened up, right? Not that much capacity, 20, 30%. You look at the cruise lines, what is it, mid-September, end of September? They haven't even been open, right? You're not even allowed to take cruises yet. And same with Disney parks aren't even open yet. They're only going to open it to pass holders who have current pass holders and open up to about 25, 30% capacity, and you can't park hop. Uh, this could add 3, 4, 5 more months of very little revenue of not getting back to normal. It's a huge deal when we're trading at 24 times forward earnings. Guys, just be careful here. Don't sleep on this COVID thing. We're seeing cases rise. Texas is another place. If we really see it to the point where Beijing, right? Everything was supposed to be fine in China. Everything's cool. They dealt with it great, the crisis. Well, now they actually shutting down a lot of places in Beijing, different parts of China. So we have to be careful here. This is a serious risk. And apparently, even by when you're looking at this is just one study, people aren't really worried about this spreading a lot. I wasn't. But the fact that I heard just this week from several people telling me, say, hey, I just want to do the right thing, let you know I did come in contact with someone and they were in contact with me. But just to let everybody know that I'm seeing this, these COVID-19 cases is actually hitting, right on my doorstep now. But guys, be very, very careful here. No one's really pricing in this risk. And if we do have a shutdown just in certain places, we are not factoring, again, stocks are not factoring this in. So be very, very careful here. But it is going to be an interesting story going forward. And the fact that, due to this survey, and there's lots of surveys out there, they don't believe that that's going to be a big deal. It is a big deal if we see a shutdown because everything right now is price perfection. So be very, very careful. Last thing we want to see is another huge crash and another 5, 7, 8, $9 trillion from the government being spent to try to prevent a recession. So guys, be careful out there. There's some big news. And as always, I'll come back to you guys soon. Take care.